Good morning and welcome to Morning Markets from True Potential. After bank holiday, I just wanted to take some time to go back to something that happened in markets on Friday and then focus on the week ahead. So looking back to Friday, we had the Jackson Hole Economic Symposium in the US. This has been an event that over the years has seen policy evolution and policy change being announced by the Federal Reserve. Last year we got details of their flexible average inflation targeting regime that they would be moving forward with. This year expectation has built around how the event could be used by Jerome Powell to discuss the reduction in the monetary support that's been provided by the US Federal Reserve to the US economy and indeed to the global economy. Over the past number of weeks, that expectation has built, but then as we've seen rising COVID-19 Delta variant cases in the US and some dispute or split, shall we say, within the Federal Reserve governors, it's been less clear exactly what would be said by Jerome Powell at the event. If we look at what he did discuss on Friday, it was very much about the ongoing improvement in the US economy, how that's giving them confidence that at some point in the coming number of months, they will be able to step back from the ongoing financial support that's being provided by way of quantitative easing. He was also very careful to say, however, that COVID-19, the Delta variant, it hasn't gone away. It is impacting activity. You can see that in some of the high frequency data, and did say in that regard that would be very much data driven, i.e. they'd be looking at the same information as we are to think about the changes to economic policy going forward and monetary policy. If we then think about the other aspect of this, why is the market really focused in on it? The market doesn't like to be surprised. If we go back to 2013, what is the market thinking about the taper tantrum then, when then Chair of the Federal Reserve, Ben Bernanke, effectively stepped back on the quantitative easing program post the global financial crisis to the surprise of markets, and we saw a very strong and swift reaction in the US bond market. That's what Jerome Powell is seeking to avoid, providing that guidance. I think the other thing then to look to the week ahead, what we'll be looking in on, it's the US employment report on Friday for August. That's very important in terms of the policy stance that we're seeing from the Federal Reserve. They've made employment a key aspect of their change in activity measures that they're looking at. We've seen a consistent improvement over the past couple of months, close to 1 million jobs added in June and July. Expectations are something around 750,000 for August. Again, important to see that on Friday. With it being the first week of the month as well, we're starting to get the PMI reports. As always, China first out of the blocks with their report this morning, and a bit of a slowdown in activity, both in manufacturing and in services. The services more interesting. Manufacturing's declined a little bit, but still remains above, above 50. If we look at the services side of things, we've seen the first reading come in below 50 since the first quarter of 2020. Remember, these are sentiment surveys, but a reading below 50 is about a contraction in activity and just shows how quickly the Delta variant and some of the measures that have been taken within China to curb that have impacted activity within the services sector. I'll leave it there for today. Please join us again tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.